Have you been wondering what's really going on with the economy right now? The jobs report says one thing. The housing market says another. Inflation is coming down. Mortgage rates, they just won't budge. Let's break it down and cut through all the noise so you can make some smarter decisions when you're buying, selling, or just watching the market. Hey, it's Mike Wise with CMG Home Loans and your weekly mortgage update. Let's get into some of the details and see what's going on in the market here. So, the BLS jobs report, let's talk about just jobs in general, right? ADP report. ADP came out and basically they thought they were going to have 120,000 jobs reported. It came in at just 37,000 jobs reported. So it was way down, way down. That was earlier in the week this week. And then the BLS jobs report came out on Wednesday and it showed it was stellar, right? It was very solid at 139,000 jobs created in the month of May. So, and the unemployment rate stayed steady at the 4.2%. So that was bad news for the mortgage rates. The ADP report was good news for mortgage rates. They started to come down, and then the BLS report came out, and basically it trenched right back up, and the rates went back up to their higher levels. Now, we do know that there's more to this BLS report because they revised down the previous 2 months by 95,000 jobs. So this is both the ADP and the BLS jobs reports, and you can see that the job creation is definitely going down in a downward trend, and the Fed should be nervous about that. Housing inventory. The inventory, it's continuing to go up. It's over 1 million homes nationwide that are for sale. That's the first time since December of 2019. So a lot of listings out there, but we'll look at some of the details in just a minute here. The median listing prices, they're trending lower, so they're starting to come down a little bit. They're not going up as fast. Median list prices are down year over year. In most cities, these declines are modest, 1 to 3%, especially when the gains over the past 5 years that we look at compared to the last 5 years. So it's different from city to city. Now, inflation came out. Inflation was good this time, right? So the CPI was way better than expected, and it just rose 0.1% month over month. There's a lot of talk on this. Have the tariffs do they have no impact, or is the impact going to be felt later? So there's a lot of differences of opinion here. Some economists are saying, yeah, it's still out there and we're going to see the higher inflation and to watch for that. But you can definitely see that the inflation is going in a downward trend here, and it is getting better. I'm not going to go into home insurance costs, but that is going up there. And then where did all the jobs go? So let's talk about the BLS report here. It added 139,000 in May is what they said, right? But the previous 2 months were revised down by 95,000 jobs. Now, this is just a continuing issue with the BLS jobs report. Now, last week, they reported that they're understaffed and that they're doing a lot of guesswork with the jobs numbers, and that's why we're seeing these things here. We're seeing a lot of changes, and if you look at this, basically the number of jobs added in 2025 year-to-date has already been revised down by a total of 192,000 jobs. That's 48,000 jobs per month. Now keep in mind the ADP report, there was only 32,000 jobs. So if you look at this here, this is a bigger look at this. You can see that here's the first reading, second reading, third, and then the total revisions. You can see all of these revisions down 22, 32, 36, 17%. So it is changing a lot. The problem with this, again, is that the bond market reacts to the first reading, right? The bond market reacts there. They don't look necessarily as much at the previous readings and what that had and the impact it had. So a lot of different, numbers. We got to be careful what we're looking at. Now, inventory. Let's talk about that and dive down a little bit more into detail. So In May, the total active inventory rose 8% month over month, which was normal for this time of year, and 31% year over year, over 1 million units for sale. So you can see that the inventory is starting to trend up here. And this is a big number since 2019. December of 2019 was where we were at 1 million homes for sale. But it's very different from state to state. So let's look at a couple of states here. Florida and Texas. This is where a lot of people flew to during the pandemic timeframes and the 2019-2020, right? Inventories are up 30% as of from May of 2019. So you can see this is just Florida and Texas. The inventory levels are trending a lot higher. There's a lot of homes for sale. Now, when you go to New York and Pennsylvania, it's a lot different, and you can see that it's lower than it was, 43% below pre-pandemic levels there. So there's not a lot of homes for sale in New York or Pennsylvania. Now, when you look at the 7 largest states, you're talking about, let's look at California, since that's where I'm located here, but percent of the U.S. population, 11.9%. Percentage of active, this is active listings in May, is 6.2%. Percentage of new listings is 7.9%. But if you measure 2019 versus 2025, we're down 7.5%. Now this is very interesting, and you can look at some of these things here if you want to, but what I'm going to go to is down here, right in this line here, Thousand Oaks, Ventura County. This is hometown for me, right? It's down 9%. Now, these are not necessarily perfect, but at the end of the day, I've been out in the field. I'm seeing price reductions. So it is interesting to see that the home prices, they're starting to fall out here a little bit. I don't think they're going to go down too much more, but we are waiting for those rates to actually come down a little bit and be more affordable, because we are in an area where the rates make a big difference on your payment. So I'm going to talk about this in just a second here, but interest rates pretty much stayed the same. There was a lot of noise that went on this week, but they pretty much stayed the same at that 6.84% number. So a couple of things. This is the Fed watch. This is something new that I wanted to go over, and let's look at this. So this is the Fed meeting. This is 4.25% right here, 4.25%, 4.5%. There is no chance that this is the next Fed meeting on June 18th. So this is next week, where they're not going to change the Fed funds rate. Now, this is July, so there's a higher probability that they're going to change it in July, but most likely right now not. This is what the Fed watch is saying, right? And then in September, this is the 4.25%. You're seeing more than a 50% chance in September that you're going to see these. For those of the lower rates. Now, for those of you that have an all-in-one loan, this is interesting because this is going to be the same type of trend. You're right here, right around that 4.3 number, right? In September, you're going to see it go down by 0.25%. And then at the beginning of the year, you're going to see it go down by another 0.25%. So the all-in-one loan, where your interest rate changes every single month, you're going to start to see that go down over the next 6 to 9, 12 months here. And so you're going to see some better payments or better interest rates on your loans without having to refinance. Now, let's see here. I'm going to just show you this quick article. This is the case for rate cut is growing. I do think, even though the Fed shows that they're probably not going to cut in June, they're probably not going to cut in July, but probably in September, I personally think that they're going to cut in July. So not June, but I think they're going to cut in July. I think that that's just a gut feeling that I have. I don't think the economy is as good as it sounds at this point in time. A lot of stuff going out there. Today, war went out, Israel attacked Iran. And, that has an impact. Oil prices. So we might be seeing some shakiness in the jobs market, and we'll see what happens with inflation with the tariffs. But I personally think that we're going to see a rate cut in the July meeting. But you can read this article. Case for cuts is growing. It talks about the tariffs. It talks about the trend. The trend is kind of going down there. And then it goes into the labor market is being quite shaky at this point in time. So as far as the yield on the interest rates here, we're seeing the yield is at 440 this morning. It's gone up a little bit as a result of kind of what's going on with Israel and Iran. But the trend is we're going down. I think that we're going to hit somewhere in this 420 to 412 number in the near future. But that's maybe 30 to 45 days away, and we'll see some lower interest rates. So at the end of the day, a lot of stuff happening. That's what's affecting the housing market. That's what's affecting the interest rates right now. This is Mike Wise, Mortgage Wise with CMG Home Loans. If you have any questions or want to reach out to me this weekend, I will be around. Hope you have a great weekend, and we'll talk to you next week.